Today was a great day for the stock market. Apple helped carry it higher after a new report showed iPhone 17 sales are crushing it. But at the same time, Trump is upping the stakes in his trade war with China. We have some massive earnings about to release as well. This week will be exciting.
A massive AWS outage early this morning sent major websites and apps down for several hours, including many trading platforms, and I know a lot of traders were very angry at this today. Coinbase and Robinhood were a couple of the more popular ones that had issues. Even Webull and Thinkorswim had issues as well. But whenever I think about this, Amazon still closed up in the green today. If we go to Amazon's chart, we can see they actually closed up 1.61% today, which helped fuel the SPY higher. And overall, if we go to the SPY's chart, the SPY had a great day too, closing up over 1%, pushing key 672 resistance. And one of the biggest stocks that helped fuel that wasn't necessarily Amazon, but Apple. Apple had really great sales out of China today. Now we can see right here, looking at this chart, there was a 14% year-over-year rise with iPhone sales. That's a big deal. There was a lot of hype with iPhone 17 whenever it was announced, and I know that the demand had been kind of growing for it as the release started to come. And over the first 10 days, it's great to see this 14% year-over-year jump, especially in China, I would say, where there's been a lot of negative reports with Apple over the past couple years. So to see these sales still rising is great, and it's helping push the market even higher.
Oh yeah, Tom, and guess what? This is Apple's first record high of 2025, which is pretty meaningful considering it has been one of those big tech stocks that has really been lagging behind the herd. While some stocks like Nvidia and Microsoft really benefited from the past couple of years' AI boom, Apple has been kind of left in the dust. So it's great to see it make new all-time highs, and also Loop Capital upgraded Apple from a hold to a buy today and raised its price target from $226 all the way up to $315. So that's a big upgrade. Tom, when we look at Apple right now, what are you seeing in terms of important levels to watch for tomorrow and the rest of the week?
So the high of day today posted right around 264.35 on Apple, and there is a key resistance zone around 264 to 265. If we actually go to the Bookmap, we can see that there are a lot of sellers around that 264 to 265 level around the end of the day today. Now, whenever I think about this, this is a big range, right? There is almost 400,000 sellers stacked up at that 265 point. Now, if we do go overhead, there is a big level as well at 270, where there's around 168,000 shares that are stacked up there. So there's two big sell walls. Now, for tomorrow, if we break above 265, the next big level I'll be watching for is 270. It's a whole dollar level. It's also psychological, so keep that in mind. But whenever I look at Apple today, it just had a lot of strength, and we've been talking about this potential iPhone demand helping boost the stock for a while now, and it's been really helping it catch up to some of these other tech stocks. And if we end up breaking above that high of day from today around 264.35, I would think that we could push 265 pretty easily, and considering the good news, I would think that there's a fairly good shot that we could end up breaking past there. So get ready for a possible 270 push. Whenever Apple actually opened up, it opened very close to 256, and it closed the day around 264. That's around an 8-point jump. So to get to 270 tomorrow wouldn't be that crazy, considering it's only around 5 to 6 points away from Apple's high of day today. So that just goes to show, if we get a lot of positivity tomorrow, we could easily get there. So watch that sell wall at 270. Apple is at some critical levels right now.
There we go. But as we know, Tom, while Apple helped boost the market today, there has been a lot of shakiness over these past couple of days, especially tied to this U.S.-China trade war. And I know we had some kind of scary updates today, but also some good ones. So what's going on there?
Yeah, Trump actually said China could face a 155% tariff if no deal is struck. Now, Trump is set to meet with President Xi in South Korea in just a few weeks, and he did say some positive statements here. He said, I think when we finish our meetings in South Korea, China and I will have a really fair and really good trade deal together. I thought this was great to hear. Of course, that's a positive statement, but with him upping the 100% tariffs to 155%, that is a big deal too. So at the same time, there's a positive, there's a negative. I didn't know what to really take from this today, Mike, but obviously the market didn't really care too much. The SPY really had an overall bullish day, and there was a lot of buying pressure. So I don't think that there was too much that really, shook the market because of this. And I thought that was pretty surprising, just considering the uppage of that tariff from 100% to 155%. I thought that was a much bigger deal than it ended up playing out as.
Yeah, it's definitely exciting to say the least, but as we know, over the past few weeks, there's been a lot of tension with the US and China due to the restrictions on rare earths coming out of China. And today we actually saw an interesting update where Trump actually met with the Australian Prime Minister, and they actually signed an agreement on critical minerals with an $8.5 billion deal. So that was interesting. And also it's actually having some stocks like Alcoa, ticker symbol AA, move up in a pretty meaningful way. So I thought this was a stock to definitely keep on watch, given how much in focus critical minerals and rare earths are right now, and especially considering the US-China trade war is still ongoing, this stock might be in play over these next few weeks.
Yeah, it was the main stock mentioned today to be involved in these deals, and we can see it rose 8.3% today, so that was a pretty big jump. And also, it has a weak correlation to SPY, so if we start to see some craziness out there from other developments like the government shutdown or something like that, then, obviously this one could have more of a mind of its own, which I do like. And if I look at Alcoa, it has been pretty strong the past few weeks, as there's been a lot of these talks with the US and China, and of course, obviously rare earths and critical minerals have been coming up a lot recently. So keep AA on the radar. It actually broke above a recent resistance today, right around $38, which helped push it higher as well.
There we go. So when we look at the market right now, Tom, we can see we're actually very close to all-time highs. The all-time high is right around $674.03. So we're only about $2 to $3 away. When we look at SPY right now, what are some key levels on your radar in both directions?
So one of the biggest things that I'm watching for with SPY for tomorrow is this key 672 resistance. Now, again, this is not just a resistance, it's more of a resistance zone. In the past, whenever the SPY touched its all-time high close to that 674 point, we can actually see, if we scroll back on a 5-minute chart, just how much chop that there really was within this zone. Going all the way back to the beginning of October, SPY started really chopping right around this exact range. Now, again, there's been hits all around 672, 673, and 674. So watch out. This is a critical range. Of course, if the SPY gets to 674 and starts to put pressure for a breakout, watch it to the upside. Something I'm really worried about, though, is a possible lower high coming into play. I know last week, SPY was on a higher low trend that actually started to break. Now, as we can see right here on the upper arrow at the top of the screen, SPY is actually testing that trend as of the end of day today. Now, for tomorrow, if it's able to get above that 674 zone and really break out, then obviously don't look for the lower high, because it's not going to be happening, right? But if we end up rejecting here, and you can identify a good breakdown, and I would really look at 669.50. That was a previous level where we bounced at a few times with the SPY, and if we're able to break below that, I think that would show some good confirmation to the downside. And I will ultimately look for another test of 660 and then 654 as we go forward. But that's generally what I'm looking at for tomorrow and the next couple days, Mike. That all-time high is pretty critical here.
No doubt. And another thing to keep in mind is that on Friday, the VIX had one of its biggest pullbacks intraday that we have seen in a little while. And we can see that historically speaking, when the VIX closes down 25% from its intraday peak, this is generally a bullish sign going forward, as the market tends to rise 1 month later around 83% of the time.
That is pretty insane stats, right? And I wouldn't have thought that, the VIX imploding like that would have that good of, next month returns, even 3-month returns. But, I guess it's just something that happens, right? And, we can see some points on the chart here where where whenever this happened and the VIX did implode, it was at a point where the market was in a point where it could recover fairly soon, like during the 2020 collapse, for example. But either way, it's an interesting statistic. And Mike, also we saw U.S. credit spreads actually drop to their lowest level since 1998. That's a pretty big deal. And credit spreads this tight usually mean that investors are pricing near perfect conditions, stable growth, contained defaults, and ongoing liquidity support. Generally, if we see people get out of corporate bonds and run into government bonds, they want safety, right? But seeing the corporate bonds and the government bonds stick together is a pretty good sign.
Yeah, it really just goes to show that investors are pretty happy with the current environment, which is a good thing. And honestly, it's not too surprising given how close we are to all-time highs. One thing that will be pivotal, though, over these next couple of days and next couple of weeks is earnings season. Yes, it's that time of the quarter again, and we have some big names set to report. Tomorrow we have Coca-Cola before open and Netflix after close, but honestly, Tom, there's a whole lot more than that too.
There really is. I mean, even tomorrow in pre-market, you're talking about a plethora of defense stocks. Lockheed Martin, for example, Raytheon. I mean, even Northrop at the bottom, General Motors, 3M, Philip Morris, GE Aeros. I can't even name them all, Mike. And then Wednesday, we have Tesla, IBM, QuantumScape, Intel Thursday, Newmont, which has been on fire with gold lately. Even some airlines like Southwest mixed in there. So it's going to be quite the week on the earnings front. And as far as events go this week, of course, we've been talking a lot lately about the BLS delaying a lot of their data. But to actually support the Social Security Administration meeting statutory deadlines necessary to ensure the accurate and timely payment of benefits, they are actually scheduled to release CPI data this Friday. So be ready 1 hour before the market opens. Key inflation data should release. Obviously, things might change. If it does, we will let you know. But as of now, things are scheduled to be released Friday on schedule.
You really can't ask for much more this week as a trader. You have CPI data set to release. You have the beginning, or I don't want to say the beginning, but you have a nice spot in earnings season. The market's at all-time highs, or very close to it, I should say. The U.S.-China trade war is still ongoing, but in a generally good spot. And at the same time, we are starting to see some signs that supposedly this shutdown might end soon. Today, the White House economic advisor, Kevin Hassett, said the shutdown could end this week. So we'll see if this ends up being true or not. But basically, he said that he suggested that Democrats were waiting to reopen the government until after this weekend's nationwide No Kings protests. But if that doesn't end up happening, then supposedly Trump will impose stronger measures to force Democrats to cooperate. We'll see what ends up happening. I could see how, in one world, a deal can end up getting forced through, but I could see in another world where, this situation only gets worse. What I do like when we look at Kalshi, we are starting to see traders price in the government shutdown actually ending sooner rather than later, which honestly, Tom, is something that we haven't seen really at any point during this shutdown.
Yeah, this seems like the biggest pullback on the Kalshi chart. We can go back to the middle of September and all the way to now, seeing this jump from over 40%, all the way, or 40 days down now to 35 days or so is a pretty big, pullback here on this chart. And, I thought that was a big deal for Hassett to come out and say that. Again, though, it was a bit political with the No King, so maybe it'll happen this week, maybe not. Let us know in the comments what you think. I'm sure there will be a lot of great debates down there.
No doubt. All right, Tom, let's get right into the fun stuff then, which are some setups and predictions. And a stock that is definitely on my radar is Beyond Meat, ticker symbol BYND. This stock is crazy. So it popped up by over 100% today. They recently completed a $1.15 billion debt swap, where basically they just saved themselves from near-term bankruptcy risk, but nothing really changed fundamentally about the company. And the stock is now short squeezing. It has a 63% short float, and it had quite the day today. With stocks like this one, they are as high risk, high reward as you will ever see. But when you have hot, short squeeze names, they can definitely move in very crazy ways. And especially considering Beyond Meat is at its lowest point ever, and there's a lot of attention to it, it certainly is possible to see a continued run out of this one. Beyond Meat is definitely on my bullish radar. I think it has the ability to move in an asymmetric way, but this stock is crazy. It is volatile, and you need to protect yourself from pullbacks. There's opportunities trading it like in an ultra short-term sense with scalps, and also in a, multiple day sense. But again, you have to protect yourself in situations like this one.
Oh my gosh, I saw Wall Street Bets going nuts today about Beyond Meat, and just traders in general were jumping on this one as it ran up that well over 100%, hitting 127%. That was fantastic. It also has a weak correlation to SPY, as I'm sure a lot of you know as we zoom out and we can just see how much it's dropped over the past few years. My gosh, Mike, I mean, this stock was once $240 and it was trading well under $1 here recently, around 50 cents. I mean, talk about a drop, but with a 62% short float, it has to be on the radar, so I will be watching it up as well. But with my first stock, I'm watching with CLF to the upside. We can see CLF actually broke out above a recent resistance today around 1450, which was great as it rose up 21% on great earnings. And what I'm watching for is a good earnings continuation tomorrow. I love the comeback at the end of the day, and I also like the high of day around 1670. So if we're able to break that high of day at 1670 and we really go for a good continuation, watch CLF up. It's in that type of sector that has been hot lately with, metals and things of that nature. So if we do see it end up rising, watch it to the upside.
All right. Another stock that is close on watch is RGTI, and it is to the downside. I know I mentioned this one a handful of times over recent videos, and it has been great to see this stock bleed, and it's still on the bearish radar. Quantum names have gotten so hyped up over the past year, and now we're finally starting to see investors not only sell out of them, but sell out of them in a rapid and almost like accelerating way. Whether you are looking at RGTI, QUBT, QBTS, or even other quantum names, we're definitely seeing a lot of industry-wide selling pressure here, which is something that's great to see for the bears. RGTI is still on my bearish radar. Of course, this doesn't mean it has to fall tomorrow, but I do still think that, it makes sense for bears to continue to look at this one. The more pressure it puts on its lows, the better the bearish setup becomes.
The daily chart's starting to look scary on some of these stocks, Mike. It kind of reminds me of some of those COVID stocks that got a little overvalued and are starting to pull over. I know that we looked at a couple yesterday, but my gosh, seeing these stocks pull back is honestly kind of relieving. It's one of those things where stocks get too overvalued and you're like, hey, it's just a matter of time before something breaks down. But with my next stock, I'm actually looking for more of a breakout with Tesla, believe it or not. I thought Tesla had a great move today up to around the key $450 resistance. Now, if we're able to get a good breakout of $450, keep watching Tesla to the upside. I could see it continuing, especially with the market being so resilient. Now, if we wake up tomorrow and the SPY posts the lower high and we end up seeing more of a rejection around the 672 to 674 resistance, then of course, don't feel the need to chase Tesla unless it's obviously beating the market or there's some good news with it. But as I look at the daily, Tesla has been really hot over the past few months. It started to consolidate, and I really like the way that it posted these two green candles here. I could see that previous high of close to 470 coming back into play. So keep Tesla on the radar. If we end up getting the break of 450 tomorrow, watch it up. But if it does reject, there's no reason to chase this one.
All right, sounds good. And let's jump right into today's momentum plays. With the first one, we have Joby Aviation, ticker symbol JOBY, to the upside.
Pretty much from open to close, this one did nothing but go up, and it closed up quite well at 11.3%. But if it breaks above $11.60 at that high of day wick, then watch it up.
With the next one, we have Navitas Semiconductor, ticker symbol NVTS, also to the upside.
We kind of have a running joke that Navitas loves these like 15 to 20% run-ups, and my gosh, it did it again today. If Navitas breaks out above 1780, then watch it up as well.
And then with the last one, we have AppLovin, ticker symbol APP, to the downside.
Yeah, unfortunately, AppLovin did pretty rough today, closing down 5.57%. And if they break under 563.75, right around the low of day, then watch them to the downside.
All right, so we have these 3 tickers on the radar for potential continuations if and only if they break through the levels listed. These stocks are volatile, so whether you trade one of these 3 or anything else, focus on protecting your capital above anything else. Smart, long-term oriented trading decisions is the #1 priority. If you need help with that, check out the Key Lessons channel in the StockedUp Discord for free. And besides that, Tom, let's jump right into today's $1.7 million big money trade. And today we are looking at ticker symbol GMED. This is Globus Medical that did pretty well today. And the trader here bought the 65 strike call options that expire on November 21st of 2025. This is a $1.7 million trade where the trader is risking $1.7 million to potentially make $11.79 million. For my advanced traders out there, this is technically a call debit spread where they also shorted the 80 strike call options. This company has been crushing it ever since it IPO'd. And over the past couple of weeks and months, it is definitely dipping from its highs it made earlier this year. This is certainly like a bold asymmetrical trade given the strike price and expiration selected. I'm very excited and interested to see how this trade ends up playing out. But I do think, given the expiration, it is a little bit of like a higher risk, higher reward trade. Not as speculative as we've seen with like DUOL, but it's definitely an interesting setup.
Yeah, 100%. I mean, this stock's starting to form a pretty good base down here, and I think that the 65 to 80 call debit spread is actually a really good zone for this one to be in. I could see it getting it above 65 pretty soon, especially because there's a big gap to fill up to around that like $65.80 to $66 range, and honestly, more even closer to 69 to 70. So if I do see, this stock continue up in the short term, and it ends up breaking above that recent high, like right around 61.80 from today, I could see this one continuing very well. Again, it's straddling that resistance from the past few weeks. So if it does break above that, I could see it, really continuing up in the short term. But again, this one, it is more of a shorter term play, right? Expiring November 21st of 2025. It has about a month left to it, so it's going to be a little bit more risky. But at the same time, the stock's running. It has good momentum. And with it pushing that resistance for, the second or third time now, I could see it actually breaking this and then even, testing that recent high around 63 as well.
Definitely. So either way, let's keep it close on watch. If you are new to the channel, welcome, and definitely consider obliterating that subscribe button. Every single day, it takes us multiple hours to do the research and production to make these videos where we cover basically everything you need to know in the stock market and more, whether it be recent US-China trade news, Apple's and its big effect on the market, key earnings, economic events, SPY levels and analysis, hot stocks keep on the radar, big money plays, and much more. We cover it all every single day. And if you subscribe, you'll get our videos recommended to you more often. But Tom, let's also give a giant shout out to today's member of the day, Bear, in the StockedUp Discord, who had some pretty nice gains today shorting some quantum stocks. So huge shout out to you, Bear. Keep up the great work going forward. It is awesome to see posts like this one. We're set for a very exciting week. If you guys are into short-term trading, check out Bookmap as we showed with Apple today. It basically shows you the key support and resistance levels to know for each stock. It shows you exactly where key buy and sell orders are stacked up, among so many other things. StockedUp viewers save quite a bit, as the link down below opens up a special offers tab where you can get some pretty nice savings. So definitely check that out. Thank you all so much for watching, and let's crush it in the market tomorrow.